Hello and welcome to Crux Investor. First of all, thank you so much for watching this video. If you like it, please give us a thumbs up. It helps us understand if this is the sort of video you'd like us to be producing for you. You can also leave your comments below. That helps us with the questions you think we should be asking, how you think we've done, and of course, what you think of Theta Gold. You can catch this as a podcast, transcription, or article on cruxinvestor.com. And of course, for our Crux Investor Club members, you get early access to this interview. You also get training courses and commentary from market experts from all around the world. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this one, click the notification bell. We spoke earlier today to Bill Guy, who's the CEO of Theta Gold. They're an ASX-listed Aussie gold developer with assets in the Transvaal, South Africa. We talked through their business plan and how they've been methodically, cautiously moving things forward. They've done a little bit of reconstruction of their plans, especially in this gold environment that we're in. They're hoping to take advantage of that. Sitting on a huge resource, raised about $4 million recently. We talked about what they're going to do to move that forward, to complete everything around their feasibility study, and when they're going to be raising money next. Going to need about $30-40 million to get this thing into production. So lots to discuss. Take a look in the description below. Some of those topics, anything interests you in particular, click on the number beside that topic. It's called a timestamp. That'll jump you through to that part of the interview. Otherwise, sit back and enjoy what Bill has to say. Bill, how are you doing, sir?
Very good, mate. How are you going?
Not too bad, not too bad. You're joining us from what, Sydney? We're near Sydney today. How are things?
Very good. Weather's good. It's very sunny. Gold price is high. It's all good.
I think as long as the gold price is high, you wouldn't care if it was raining, would you? So whereabouts are you? You're sort of slightly north of Sydney.
Yeah, Terrigal's on the beach. It's a coastal town. It's not far, sort of about an hour out of Sydney.
Okay, cool. Well, look, today we're going to hear about your project, Theta Gold. First time we've spoken, first time we've met, and first time we'll have heard this story, so looking forward to that. But why don't you kick off, give us a 1-minute overview of what you have, and then we'll pick it up from there.
So Theta Gold Mines is an explorer and a gold developer. We're a near-term production story. We're listed on the ASX. We're listed on the OTCQB in the US and North America. The project sits in South Africa. There's 620 square kilometres under management with 43 historical gold mines. And really, we're aiming to head towards production end of 2021.
Okay, brilliant. So how long have you been at this then?
I joined about 3 years ago. Essentially, my main background's geology exploration. Since I've joined, we've added about 3 million ounces to the story. So we started off with about 3 million ounces. We've completed about 20,000 meters of drilling over that period. And really what I've sort of asked the team to focus on is the open pit material. In South Africa, they're very keen to go underground all the time. But really what we've been developing is the open pit story first.
Right. You've seen some nice growth in the share price recently, so that's good news. But the accusation that's being thrown at you a lot is the lack of communication. People just don't know what you're up to. I mean, what do you say to that?
Yeah, sure. I think it's really about us being in a position to really market the company hard. Effectively, we've really been concentrating on restructuring it, rebuilding it, getting the resource base up, we've completed the feasibility study in May 2019. We actually got a good lift through the share price for that process about, bringing on more believers into the marketplace. South Africa is an unusual jurisdiction for Australians in a way. There's only 4 companies on the ASX that are listed and working in South Africa. So it's hard for the market to draw comparisons to us. That's why we look to the OTCQB. Effectively, when you look in North America, most of the majors gold players out of South Africa are listed on that exchange.
So when you say rebuilding, reconstructing, what are you fixing?
It's not so much about fixing, it's just about a change of direction for me. We have a lot of shallow open pit resources here. Effectively, historically, they've always concentrated on the underground aspect of it. And really, with the geometry of the reefs and the hills, we saw an opportunity to look at doing some open cast material. They've been mining here for 150 years, but there's no open pits. So we're sort of the first ones that come up with this idea and concept.
Right. So while you've been rebuilding and reconstructing, do you think you kind of lost sight of all of the other components that you need to do? Have you been too inward looking?
No, I don't think so. There's no point coming to the market until you're ready to tell the story, until you're very close for that process. We drill results through 2019. We completed a scoping study. Well, didn't really move the market. It wasn't until we put out the feasibility study the market really moved in price. So that was a great catalyst for us, and it just tells us really the market's working. When you've got something very meaningful to say, the market will listen, and we just needed to get to those points. And I think we're, at a very exciting time now.
Well, it's a very exciting time in the gold market for sure. I think lots of people are getting lots of money. So let's talk about your corporate structure. You've got whatever 454 million shares out. How much cash are you sitting on today?
Last month we raised $4 million to complete the final bit of working capital for the feasibility, to finalize a few things. We're currently doing our geotechnical drilling. We're doing our financing. We're doing our permitting. So that's in train. So at the moment we've got cash on hand. So
you've got about 4 million because you've raised 4 million? Or you've got a bit more?
Yeah, there's about that.
Right.
Probably a little bit less.
Okay, so talk us through, what's the timeline to deliver all of those things? Permitting, the feasibility study, etc.
Okay, well, the feasibility study has been delivered. We have announced our preferred mining contractor, so we're finalising that contract. We've just completed our geotechnical drilling to go with that feasibility study. We've currently got 5 plant builders tendering for this process. So there's 5 guys tendering for this process, and we're in talks with a number of parties for financing the project. So we expect to have all this completed, the next 2 quarters. Okay. That's the target.
Okay, so I'm going to keep coming back to this. You've raised $4 million, but what are you expecting that to be able to do for you in terms of, people's perception of how you move this thing forward?
Yeah, sure. So really for us is, before we go back to the market to raise money, we expect to have the mining contract completed. There'll be some trial mining. The permitting should be in place. All these really key factors, we always look to try and as little dilution as we can for the shareholders. And the more we deliver before we have to raise money again, the better bang for the buck for the shareholders.
What's the plan going forward? What are you? Are you a mine builder?
Yeah, we're in the development phase now. So we have an open pit project we call phase 1, the Theta open pit project. That's on MR83. We have another 500,000 ounces ready for conversion for phase 2 on a different mining lease. So in South Africa, you have to deal with the project farm by farm. You can't, like in Western Australia, we just draw a circle around the bit we want, and we will go and get a mining permit for that. But in South Africa, it's a very sort of funny older system. So you have a farm, you've got to get that one permitted, and then you can do it farm by farm. You can't just cookie cut the bit you want out of that mining right. So that's why we're sort of taking this approach. The other approach really is, we see unlocking the value for the shareholders is, okay, once this permanent financed and ready to go, then everyone's going to put a real value on those whole 6 million ounces.
Okay, I mean, obviously South Africa's suffering a lot with kind of COVID conditions, like a lot of places, but they've really kind of locked things down. How's it affecting your ability to do business in country at the moment? I know you're in Perth, but you've got a team over there.
So basically, Theta has an office in Johannesburg and about 30 people on the mine site. So the guys have been basically operating like this through Zoom. We have 11, 12, 15 consultants that have been working on this process. That's all gone through. We're dealing mainly with soft issues at the moment, not the construction and building phase. So that hasn't been a problem for us. The lockdown, probably the only impediment we had with the lockdown was the mines department was closed for a while. So that's held up the permitting a little bit, but we're through that process now. At site is operational. The guys completed their COVID regulations, 900 pages of documents, so the mine site is now operational and has been for over a month. The guys are drilling and exploring there today.
Okay, so I mean, South Africa, as you said, it's an unusual place for an Aussie company to be operating, and junior companies, without having a sort of history of operating, it can be a tough place to operate. We've interviewed several South African companies who deal with strike action, union action, disruption at local and federal level. I mean, what's your experience?
I'm sort of a bit weird. I like it. South Africa to me sort of seems a little bit like 1970s Australia. All the problems we had in Australia back then, we solved. People don't give South Africa much credit, to be honest. It's got a new president now. He went hard with the lockdown. He actually shut everything down when other countries were sort of going, yes, no, maybe. He just said, no, we're shut, and he took control of the situation. I think, that guy, Cyril Ramaphosa, is a billionaire. He brought McDonald's to Australia. He made his first money out of mining. He understands mining. The mine minister is an ex-miner. He understands mining. So there's a very different vibe in South Africa now.
There is, but they're struggling with cash, aren't they? They're having to get, IMF are having to step in to kind of help things going. I mean, does that make mining even more important to the economy?
Yeah, so the minister recently, I think it's about 3-4 weeks ago now, might be a little longer, gave a presentation to the Minerals Council, which is effectively the industry's representation body over there. And basically during his speech, he told the Minerals Council South Africa is going mining again. And that's what they want to do. So, the challenge is there for the government. We're more than happy to meet the challenge. We're excited about it. I really see South Africa as also relatively underexplored on a number of fronts, particularly in terms of gold and where we are. So we see a lot of upside with the project going forward as well. So we just won't be developing, we'll be exploring as well.
Okay, well, let's start talking about the assets. You're up in the Transvaal area, is that right? Yeah. So
so we're about 370 km northeast of Johannesburg. So we're out in the country. It looks very similar to country New South Wales. Very small population base. It's relatively isolated out there. So there's not a lot of people, which is great, because a lot of time the problems in South Africa, they talk about, the Wits. The Wits is actually in Johannesburg. Johannesburg's the city of gold, is built on that mine, and the city basically outgrew the mines. Effectively, Johannesburg's almost a mega city now, and you're trying to mine. Like for us, we like trying to mine in Parramatta. It's pretty hard work. But where we are, very gentle, rolling hills, countryside, small population.
Okay, so tell us a bit about what you've got. What are the numbers?
Yeah. Okay, so 6 million. So really the idea is to capitalize on the first 2.75 million ounces. That's in 4 mines. So there'll be 4 phases. One phase is the first project we're getting permitted now, the Theta open pit project. It's a very shallow open cut mine. On average, it's about 60 meters. It goes down to 113 meters at its deepest point. That'll be done through a process of contour haulback. So as we have a face goes up a hill, the dirt's pushed behind us. So a lot of that original contours will be restored to the people. So the population is very supportive of this process. They'll get their money, their jobs, and their hill back. Then we'll move into phase 2 on 341, which is another extension. There's 500,000 ounces of inferred material over there ready to be converted into a mining reserve. We'll also be looking at the underground. So there's a thing called Riefontein. Riefontein's about 8.5 grams and nearly 800,000 ounces. Vertical vein, very similar to Western Australia. Quartz sulfide. There's about 3.5 kilometers of strike length there. The old timers discovered. Effectively, Riefontein sits in a 16-kilometer long structure. So we see potential to the north and to the south when we get into that. And we've got a mine called Beta, which sits just across the road from the plant. 1.1 million ounces, about 6 grams, and it's a flat reef, and it dips about 7 degrees. And that's, will be the last of the stage 4 projects, and that'll give us access to the first 2.75. Hopefully we're building up to a production profile of around 160,000 ounces over the next 4 to 5 years.
Okay, so the plan of
that's 4 of them.
Right. Okay. So plan of attack is you'll get through this next phase. Spend your $4 million. You're going to go to the market, raise some more capital to actually move things forward. What's the plan of attack on the ground, though? What's number 1 target, number 2 target? Yeah.
So effectively tomorrow we're submitting the permitting. So that'll go into the DMR. On the ground, the guys are currently looking at the underground. What the board wants to do with this higher gold price is look at ways to accelerate that 5-year program and shrink it down. So we've brought in some consultants with a lot of underground experience in South Africa, and they're currently going through all the old mines, looking at what can and can't be done, and we'll sort of be enunciating that vision and their results sort of in October.
Right. Okay.
when they've completed their work.
Okay. Fine.
And in the meantime, the open pit goes forward relentlessly. So, as far as we're concerned at the moment, probably do some reserve drilling towards the end of the year for the phase 2 program.
Right. I mean, are you kind of tempted to try and accelerate this process given the current gold environment?
Yeah, we are. I'll be honest, for probably when I joined about 3 years ago, there wasn't a lot of interest in the gold space. So we've sort of been a bit hand to mouth, to be honest, to push it forward. But the board's always had a great deal of belief in the project and has always pushed forward with everything. If you look at the last 24 months of announcement, there's been a significant release nearly every month. So, there's been a good steady stream of news flow. Really, the market's really looking for those key items at the moment. But, we're always active. We don't sit on the money. We move the project forward. And we're pretty excited about it, to be honest. And we think, with the higher gold price and the share price does what we hope, then, and the money's at the right price, then you would accelerate this program for sure.
I mean, so again, I'm just trying to understand the mind of the management team here. You've got a decent sized resource. I'm just trying to where's the optimum value lie for you as a business? Do you say, look, the gold environment's like it is, it's not going to get better than this, so why not sell this thing? Because there are people sniffing around. There's always people sniffing around when you've kind of got a big resource like this. That's what we've been hearing for the last 2 years. Majors are running out of resource. So have you got the stomach to go and be a mine builder?
Yeah, I think we do, actually. So the board, if you look at the board structure, we are not so much bankers. Don't get me wrong. We have a banker on the board, Tim Birkin. He was a director of Gemfields. He worked with me on Jupiter Mines. So me and Tim worked together. I was on the exploration side in Australia. He built the Chippy mine as the CEO there. But for me, if you really want to get great value for something, the market's and I've got to believe you're actually going to build it. I want someone to pull this out of my cold dead hand for a lot of money if that's what they want to do. There's a lot of work gone into this, and so we're not stopping for anyone. If someone wants to play catch up, that's up to them.
Okay, run us through some of these numbers here, because obviously the looking at it, the AISC is pretty attractive, especially in today's environment. So once you get going, you should be. You'll make money, but it's also not a particularly large target you're going for in the first few years, right? Yeah, so
we have a number of natural advantages here because there's 150 years of mining history. We have roads, we have water, we have electricity, we have a core staff. We have a plant that's actually oversized. In South Africa, you permit the plant footprint. So what we're basically doing is getting started, putting the plant on the footprint that's fully permitted, the tailings dam that's fully permitted already, and then we can expand it as we go along. So really, I guess currently in the gold environment, there's really only one model: make it bigger, and sell it, which is great. That's one model. But we feel, in South Africa, with our set of environment and the way the market's perceiving us, we'll get a better bang for our buck for our shareholders. Once we start to pour gold, then people are going to really translate to the whole 6 million ounces.
But why again, it's just coming back to the question, in this gold environment, why are you starting with, the starter pit optimization feasibility study, it seems quite modest in relation to what you've got, but are you continuing to look at that and evaluate
We'll be running, really for us at the moment, it's about a staged process. So we, like I said, during what we're talking about at the moment is really looking at that underground component, particularly Riffontaine and Beta. So the guys are doing some work on that. And we'll look to see where we can accelerate that. We've got the permitting going on, the financing going on. As an investor, once those two boxes are ticked, you're going to be very confident about what's going on. Then when we go into the extensions, all this stuff requires a fair amount of capital. And the question is, what price are you going to be buying that capital? And, and personally, I'd rather be buying at a higher price than a cheaper price.
Yeah, for sure. But you've got to have a sense of what you think your investors and the board is going to be comfortable with, and say, now's the time to take advantage of that. Money's being thrown around. It's because cascading down from a lot of these big producers at the moment. You know, have you had conversations? Have you had approaches from strategic partners? Or, you know, my day in banking, I'd be phoning people like you up and just saying, hey, do you fancy some money? Have you had any of those conversations?
Yeah. I'll be honest, it used to be a case that we were ringing everyone. Now people are ringing us, which is nice. I don't really want to go out and create like a spurious market, that we're going to just sell it. That's not really our goal here. Obviously, if the price was right, we would certainly look at it. We're here to make money and add value for the shareholders, whatever the best option is for the shareholders at the time. But if you look at Cardinal, it was sat there for ages on 100 million market cap. It wasn't until it was permitted, then everyone started fighting over it.
Yeah, that's true. It'll be interesting to see how that thing plays out. From now, and what are the sort of considerations that the board is discussing each month? You mean, what are you evaluating? Because you must be in this market. It's fairly dynamic. Things are changing relatively quickly. There's a lot of M&A. There's a lot of fundraising going on. You must be looking either over your shoulder or slightly jealously at some of the companies out there.
Yeah, no, not so much jealousy. I think for us, it's really about that growth story. If we look at the share price, it's been steadily going up. The volume in the shares is steadily going up. So it's a growing story. We've got a pipeline of projects. At the right price and the right time in the cycle, which is probably not far away. The board will look what can be accelerated and what can't. So obviously we'd like to get into phase 2 probably a little bit earlier. We'd also, for me, probably the exciting thing really long-term is the underground, because the underground resources there, are sort of immense. There's about 4.5 million ounces there already, and when you think about that, the replacement cost, the replacement cost of gold now is about $40 an ounce. So, there's a lot of value on those resources. We have pretty good access to, particularly the upper levels in the mine, and they're all relatively shallow, so nothing goes below about 350 meters sort of thing. So it's a very shallow mine, and even the underground. So we have those, and really what we will look at in the coming months, and like I said, the guys are on the ground now in the underground looking at what can and can't be done, so we can come up with a sensible plan to accelerate that process. Get the data, get the results, and let's see where we are.
Okay, obviously, look, clearly the dynamics are going to change between the open pit and the underground. With the grades you've got, you're going to obviously the numbers are going to change. Okay, why?
Yeah, sure.
Of course, right. And the grades aren't particularly high. They're okay. They're not. You're not chasing high grade underground veins. Does that mean the AISC is going to change? Does that mean some of the economics are going to change?
No, actually, underground mining in South Africa is relatively cheap. So when you look at when you say the grades aren't particularly high, I sort of find that a little strange. So beta's about 6 grams, Ruffintane's about 8.5 grams. If you look at some of the companies on the ASX now, like Bellevue, they've got 11 grams, and they're already capped more than us, and they're a fair way from mining. So I think the grades are perfectly acceptable and quite high in parts, and those grades are also diluted. So they're diluted grades from mining. They're not the reef grades. So that's sort of some of the things we'll be looking at in the coming months, see what needs to be done there. We have also, probably with our current geology and exploration models we're developed, we also see potential around the areas that need to be explored and underexplored. Brought in a top tier firm from Australia called CS Global. There's very good geological consulting company. We're next to the world's largest igneous intrusion, big source of metal and heat, the richest metallogenic province on Earth. And what they really identified for us were the key structures delivering that metal. So there's other opportunities we can look at as well going forward.
Okay, but let's look at the exploration component there. So you've got a decent sized resource. You're looking at open pit. You're looking at the underground mining. You're talking about raising money at reasonable values. So exploration is some ways off, isn't it? You don't need to be looking or talking about that happening anytime soon.
No, we just want to make sure the market's a funny thing. The market at the moment's loving exploration and drilling results. So, we're aware of that, but we are focused on the main game, which is bringing the first phase into production. So all the energy and effort goes into that. But, we don't want the market to think, oh, this is just 6 million ounces either. Because I don't really think that's going to be the case. And even if you look at the first 4 mines we're tapping into, 2.75 million ounces in the first 4 mines, that doesn't include our biggest mine. Our biggest mine is Glyn's, which is about 1.6 million ounces on the book. Historically was the largest mine in the region and produced over 34 tons of gold. So we basically control our own gold field. And what has killed a couple of companies historically in this process is they tried to do everything at once. They were too greedy, if you know what I mean. Tried to eat all the Smarties at once. We call it on site. So we're really just trying to stage the approach and the growth. And with the current environment, the gold, we can look to accelerate it as well. But, we've got to go about our business in a logical manner.
Well, that's what I'm intrigued about, whether you want to mine this thing or you're building it to a certain point of development, advanced development, because you've got to leave something on the table for the next guy as part of the negotiation, yes. Don't you? So that's what I'm interested in how you plan out your capital needs and your capital expenditure.
Yeah, for the moment, we know we need the sort of total CAPEX and some working capital to get in production is about 40 million US. So it's a very low CAPEX project, right? And that includes about 10 million of working capital to get through those phases. So really our goal is to finance a large component of that CAPEX. There's opportunity with project finance, there's opportunities with forward sales, there's all sorts of things that can be done there at the moment. So we're looking at all those things. So really, I would park that separately. Then if we look to the underground, original idea was to actually drive the underground from profits out of the open pit mining and then do that. But if you start to see, the share price good and working capital there available, then you would look to accelerate that underground program. And then, you would shorten that 5-year program down to maybe 3-4 years. And then you're a mid-tier producer in 4 years. Right. I still think that would be a great result.
So, I mean, you're sitting in Perth. You've got the Aussie team, you've got the South African team. I mean, what are you bringing to the table? I mean, you've done the sort of, you talked earlier about kind of reconstructing the company, but are they kind of fairly self-sufficient over there?
Yeah, no, the South Africans are very good engineers and very good geologists. There's no issues with that. I guess if you really think about it, the Australian South African sort of side of things has been very successful in the gold space historically. The Wits, the South Africans don't like you remining them, but that was discovered by an Australian. Our gold field, which was I think the third one discovered, and the first official gold rush in South Africa was discovered by an Australian. So, it seems a very good combination. I find Australia is a very big producer of minerals. People don't understand, it doesn't always have the best resources, but it's very conceptual about how we go about our business. And I think it's that conceptuality we bring to South Africa.
Yeah, okay. Well, Bill, thanks for that overview and run through of the company. I think it's an interesting story you've got there, and you're obviously managing the way you take this forward in the most effective way for your shareholders. You should come back on and sort of tell us how you're getting on and how you're spending that $4 million, and let's see if you can move that share price. Appreciate it.
No worries, we will, Matt. Don't worry. But thanks for your time today. It was great to meet you, and thanks to all your viewers.